following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day, and I hope it's spring right across this great country of ours. Should be. About time. This is by an unknown author. To start a better life or a better world or a better future is simply to believe that it is possible. Market-wise, let's take a look at it out here. We have the Dow Industrials down 78, NASDAQ off 26, S&P's off 11.5, gold contract down $9.10, trading at $1,204 an ounce. Silver down 6 cents at $16.53 an ounce. Copper flat at $2.78 a pound. Light sweet crude up $1.32, trading out at $58.38 a barrel. Bonds, we have the 10-year down 13.6, 128.16. 30-year off a point and 19 ticks at 159.28. King dollar down 864 ticks, trading at 95.33. The euro is up 128 at 111.11. How cool is that? All ones, 5 ones. Yen is up 10 at 118.95. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. I'm going to start off with the future S&P. The reason being, folks, I want to show you where this market has been, where I suspect it wants to go. You had the Fed meeting come out at statement at 2 o'clock. Bottom line, it's status quo. The Fed futures are saying now that they come out with... So picture, this is the last statement until June 17th. They don't meet in May. Bottom line, Fed futures are saying, hey, maybe December now we'll have a quarter-point rate rise. So if we take a look at these futures, this is what you have. You know, in the market, you know, up, down, all around today. Well, guess what? It's not done yet, baby. And what you're going to see here is this. We've had a price spread out here of 22 points in the S&P futures out here. We've got down to a price point of 2090. Well, guess what? I suspect by this close, folks, we're going to get to 2088. And what 2088 is this. So check this out. This is pretty cool. So when we came down hard this morning, right? You get down into the price point of 2090, but what's always dangerous, folks, is you didn't test the low of the spike of yesterday. That little baby's going to get tested. The real question is it coming into the close or is tomorrow morning? I suspect, you know, it's going to try to make it into this close. You get an hour. And that's a long way down, by the way, just 12 points down. You know, we'll see where this shakes out. That is the short-term deal. Longer-term deal, let's go over to the SPY and take a look at the SPY. This is what you have set up in the SPY right now. SPY's trading at 210.56. The SPY has already failed at its highs. You're inside the range again. SPY is going to be making its way, excuse me, folks, down to this 204.12 level. That was the lows that were established, and first low was established March 11th. Second low was established on March 27th. We take a look at the NDX 100. We use the Qs, the 3 Qs for the NDX 100. NDX 100 is trading at 109.40, and you've done 28 million shares. The 108.91 will get you inside the lower range. Now, you can make the case that you're inside the lower range at 109.42. What that is, that was the spike up on March 2nd. I'd much rather this thing be in 108.91. Why? Because it's traded there at a longer period of time. We traded there for 8 days. Bottom line, what you do have is you have another expansion of volume as you get lower. Qs want to run down to this 104.24 in the shorter term. Longer term, what are we talking? Longer term, folks, you're talking that October 15th swing low. It's a nasty swing low, too. Euro, small caps. Small caps have done 21 million shares. They're in the lower range also, trading out at 123.98. The 121.54 wants to get hit. We're going to see that baby get tested. Now, let's go over next to gold. We take a look at gold. Now, they haven't been able to hammer gold. What they've been able to do is that they've been able to hold it down when the dollar index, and we'll get into that, the dollar index was down over 1,400 ticks. So what do we have out here today? You get a sideways move in gold. Bottom line, I suspect what we're going to see, you've done 132,000 contracts. What you're going to see, this has been a complex ABC structure since it was running over its B point on April 1st. I suspect Thursday, Friday, they're going to try to hammer gold into this 1195 once again, maybe 1187, 1188. Bottom line, gold wants higher price. And all this is doing is building monster cars for a nice, sweet move topside. Bonds. Now, let's go look at the bond market. We have with bonds is this. First, I'm going to start with the TLT. TLT out here today is trading at 126. The bonds, folks, today have gone down on price, up on yield. The TLT has done 9 million shares, are trading at 125.98. Now, the high of the low is 124.83. I suspect we're going to make it down there. It's going to need a lot more volume to blow that out, however. We've done 9.5 million shares today. That baby is going into 20 million. So I suspect this is a consolidation move that we're in. But what the bond market is projecting is that, and this has been a change, from the first time it came off the highs on February 3rd, that baby is coming off the highs with volume. The high in the TLT is 138. First leg down, took it to the 122. We do a counter trend bounce up to 132. My take is that I suspect that the bond market has changed, and the dynamic is from up to down on price, down to up on yield. Now, let's go over to King Dollar. This is pretty amazing. You talk about testing, and, always this testing procedure, folks, is always just wild. I remember when, first understanding, what is a test? How does it get done? And when you have to do a testing, this is what's really wild about a testing procedure in general, folks, in the markets, is that the bottom line is that no matter what the price structure is, meaning it can be 1,000, it can be 2,000, it can be 5. I have no idea how it can go to the ticks, but it goes to the ticks. And when it does it, it still blows my mind. Okay, so now what do we have? On March 18th, that is when the market took conniptions. That's when actually the bond market went down 2.5 points in like a heartbeat. Okay, that was like a flash crash in the bond market. Well, in the currencies, the dollar index went from 100.12 down to 94.76. That moves almost unheard of. But it's not unheard of because it did it. We got down there, folks, and we did 102,000 contracts. It finished the day out at at 98. So it gets down to 94, it finished out at 98. It does 102,000 contracts. The low tick on that was 94.76. Well, we tested it today, 94.75. And guess what? What do we test it on? We're going to test it on bigger volume. This is going to be a trip watching this thing shake out. We've done 99,000 contracts thus far. It only needs 102,000. So now what does that set up? First, what it was set up is this. I suspect we're going to get some kind of a small bounce. The dollar now can bounce up to about 96.56. Where I'm going with that, that's going into the lows of April 3rd. Then what you're going to get, then I suspect we're going to get some real downward drift in an incredible way. So it's going to be wild watching this whole baby shake out. Bottom line is that you can expect high volatility. You can expect the volatility is going to stay here. And, bottom line, we'll see where the rest of this shakes out market-wise. CRM, what you have with Salesforce, folks, Salesforce basically came out and said that they had just hired a team of bankers. Why? Because they basically have a takeover bid. Someone wants to take over Salesforce. We'll see where that baby's shaking and baking. Salesforce is trading at $73. It's been as high as $78, as low as $65. This is Tom O'Brien. This is TFNN. You stay right there, folks, and you can expect more volatility coming into this close. Dow Industrials are down 64. Nasdaq's off 25. S&Ps are off 11. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. And you talk about some hits out here, folks. So first, the equities that are up the most, you get Valiant is up, let's see, $1. Well, no, it's up 4.89. That's 2%. You get Stella Jones is up 2.80. That's 6%. You get Home Capital Group up $1.50, which is 3%. Genworth, they're saying they want to go private. That's up $1.45. That's 4%. Tahoe Resources is up 93 cents. That's 6%. So those are the equities on the way up. Check out the equities on the way down. You got Buffalo Wild Wings down $23, 12.5%. Wynn Resorts is off $21, 16%. Humana is off $14, 7%. Stratus is off $11, 22%. Monster numbers. If we go over and we take a look at a few of these right now, and we'll start with United Health, because United Health, see what's happening inside United Health. You know, the rest of those have been dogs for a while. United Health is a little bit different. United Health is down $3.95 right now. That's come off the high, and you're coming off this high with volume. Okay, so United Health, let's bring this up. I'm going to put this on a weekly for a second. Because what you want to do when you're bisecting and dissecting markets in general, folks, is that you know the equities that have already got crushed. So what you're looking for is new entities that are starting to fall apart. And United Health, you know, that has been on a tear, no doubt, okay? If we bring this back from October of 14, you go from $80 to $120. So we went up 50%. As we go up 50%, what does it do? Well, guess what? It makes a high with no one is in the store. It made a high of 123. No one literally was in the store. The last time it had any volume on the way up was 114. Man, I'm telling you, when these things start hitting, folks, man, they hit fast and furious. So where are we at? We're at 113 right now. You're at that, let's see, 28 million. It's going to be close. It's coming into strength with about the same amount of volume on the weekly. So we'll see if that's just going to be support as it comes down to that level. On the daily, what you do have is that it's another, let's see. So if we look at this on a daily, you're doing, the dailies kind of, you know, the dailies a toss-up too. So we're coming down with 5.7 million, you're coming into 8 million. Wynn Resorts, WYNN, this thing is getting toasted, roasted, all of the above. This is, the gambling stocks, folks, are going to be going right back to where they started from in 2007. Wynn's down $21, monster volume. It's a monster ABC structure on the way down. In fact, if we put this up, let's put this on a weekly first. See where this shakes out. This is nasty, man. This is nasty, and we'll bring up. I'll bring up Las Vegas Sands after this. So Wynn's breaking everything. Now check this out. The week's not even over, and we've already done more volume on the weekly. We've done 19 million shares. You're breaking down. Bottom line, conservatively, you got 160. It's actually a small one. It's a 40.8 to be. So you get $99 is the next step. Now let's put this on a monthly and see what happens on a monthly basis. On a monthly basis, this is where this comes into real problems. So on a monthly basis, what you have, you've already broken the 124. That would have been some support. On a monthly basis, you're saying $54. $54. $54 is the high of October of 09. That's the next stop. That's and there's just nothing to stop it, man. There's just nothing to stop it. Let's go to Las Vegas Sands, LVS. We take a look at Las Vegas Sands, see how they're trading. Oh, that's interesting, man. LVS is not getting hit like Wynn. And folks, this will get hit. You know, you have volume. Oh, see, now this one's wild. So check this out, man. This just blows my mind when you see this. Now, this is great just to watch how this plays out because it's so clean. What do you have with Las Vegas Sands? You have a high volume swing low at $49.82. You're trading $52.89. Bottom line, it's going to get hit. Just a matter of what day it's going to get hit. The thing that, now this is where you can really glean huge amounts of information out of the marketplace. And this is what it is. This is deviant, but this is what it is, folks. When you get a Wynn Resorts that comes down $20 and 18% in one day, and they just come out with their numbers, bottom line, and Wynn Resorts on the way up was marching forward with Las Vegas Sands because it's all about Macau, China. That's all it's about, okay? They make so much more money in Macau, China than they do in Vegas. It's insane. Bottom line, you just put that together, that little baby is going south. It's going to get down into those numbers. Huge, huge deal, no doubt. If we go back to the CRM for a second, so there's going to be huge amounts of speculation. I suspect what we are going to have after the close out here is that they will actually release who is going after Salesforce, okay? Now, if we look, we were speculating inside the den. I thought it was a great speculation. One of the targets was talking about IBM. Because bottom line is that IBM has been going topside for the last 10, 12 days. And it's like, okay, what's going on with IBM? The speculation inside, and listen, just because the speculation inside the marketplace is it's Oracle, I think IBM's still on the table. We'll see where that shakes out. Oracle, now, but what Oracle did do, so check this out. Oracle has, this morning, they floated a 40-year bond. And, man, you talk about doing it the right way. It's pretty amazing. So that's the largest bond offer in, oh, my God, a huge amount of time. So check this out. This is what they got off this. So they got $10 billion this morning. So they're going to have plenty of money if they're going after Salesforce. Salesforce is about a $50 billion market cap. This $10 billion bond market offer would start in a good way. So check this out, though. This is what's amazing. They got $2.5 billion at, like, oh my God, it's not even, this is like crazy. They got $2.5 billion on a 7-year, and they only paid, my God, they didn't even pay a percent, not even 1% for that. They got $2.5 billion on a 10-year, and they paid 1%. They got $500 million on a 15-year, and they paid 1.3%. They got $1.25 billion on a 20-year and paid 1.25%. They got $2 billion on a 30-year and paid 1.45%. And they got $1.25 billion on a 40-year, and they got, my God, 1.70. That's amazing. That is just, imagine getting 40-year money for 1.7%. That is about as intense as you can get. That is just absolutely amazing. Wow. Maybe I'm wrong. One second. Broken respect. I think I might be wrong on that. I think I didn't add up. I think. Sorry about that, folks. I think what I didn't do that was plus. Well, I'm not sure. That was plus on top of something, I think. I'm not sure, because in the den right now, this says 2.5 to 4.3. We'll see. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials are down 70. Nasdaq's off 27. S&Ps are off 11.5. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose? No worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have, let's see, GE is down 15 cents. You have GoPro up 622. Genworth is up 97 cents. U.S. Steel getting croaked. That's down 15%. That's down 321. You get Cisco Systems off 20 cents. Apple's down $1.64. Twitter down 388. That equity continues to go south after the release yesterday, the premature release of their numbers. If we go take a look at Twitter and we take a look at what's TWTR. Okay, so, man, this is nasty. Okay, so you take a look at Twitter. because it goes from $52 down to 38 in 2 days. Put this on a weekly, and what you're going to see, this is going to be intense, man. Bottom line is that, they're taking a lot of money. There's no doubt about that, but it's not enough. And what you have is this. Oh, so check this out. This is wild. Twitter, folks, okay, has a high volume swing low May of 2014. Now, the high of that low is $39.60. The low itself, this on a weekly, is $29.51. Your volume at that point, when we take a look at it for the week, was 297 million. Thus far, we've already done 211 million today. No, yesterday and today. No, yeah, this week, Monday, Tuesday, Wednesday. So your probability that you do more than 297 million is high, because the day's not over today. We have 2 more trading days. Okay, so how do you deal with this? Well, what you have, the information that's getting released here from Twitter is this, is that, number one, you're into the bar. Number two, the volume is surging. What does that equal? That equals you're going to go to the low of the bar. The thing that's amazing about that, it doesn't mean you stop at the low of the bar. This thing is going to have some heavy-duty, it already has heavy-duty damage, but I expect you're going to see heavier damage. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Hi, thanks for taking my call.
Sure, man.
I want to talk about America's favorite stock, Apple.
Okay.
Yeah, the ex-dividend date, I believe, is May the 7th. And basically, we're coming up to the end of the month, so portfolio window dressing. Realistically, how much of an upside do you give on this stock?
It contests the highs of yesterday, because what you have here, that's actually a high-volume high yesterday.
It was 133.13?
134.54. It's not that it's the highest volume, but when you got to a higher high, you had volume there, more than likely it's going to try to test it.
Okay, how much of an impact would the weekly options have on your thesis that it can test the high volume high?
When you say, I would not be buying puts on Apple right here. There's too many other trades that are so easy it's sick.
Yeah, but I mean the weeklies. Obviously, the I don't know, the market makers or somebody that some heavy duty. There was some heavy duty selling at the open yesterday, and obviously they're trying to depress these options. I mean, realistically, we would be sub 135 by Friday, huh?
Well, what has happened? So if what happens, folks, on Tuesdays? Chad Coker from TD Ameritrade does an outstanding show, and if you look at the volatility inside Apple has died, So market makers, and not just market makers, option players aren't looking for a huge amount of volatility inside Apple. It flattened out, man.
Okay, so I look at 3 positives coming up. When does the share buyback officially kick in? Is it Friday morning?
No, the share buyback has already happened. What they did is that they brought the share buyback from $130 billion to $210 billion.
Okay.
So they can pump that whenever they want, man.
No, it's a 3-day window from the moment of the earnings release, from the conference call, isn't it? It's a 3-day window. There's a 3-day blackout period or something, and then they can start buying?
I don't know that. I know that this has been an ongoing deal. This isn't something new. What was new is that they said they're going to add an additional $770 billion into that buyback. That would keep it going until 2016 to 2017. So I don't know what the rule is as that, bottom line, how many they can buy, when they can buy them. But
I mean, the yield on the stock is very low. It's about 1.41, something like that. I mean, do you think portfolio managers, obviously, if they wanted to window dress their portfolios, they would start buying this back up, and just to demonstrate to the clients that they were long America's favorite stock?
I don't think they have to do that right now because they're all long. there's not a fund that doesn't own this stock.
Okay.
That's, you know what I mean? I understand what you're saying, and that's normal, okay? But there's not a fund and that's one of the problems, and you hear this a million times, people talk about the law of large numbers and all that, and I heard someone say the other day, well, that's not true, the law of large numbers. Someone just says that. Well, guess what, folks? It is true, okay? That is not a math person that said that. It's real easy to grow at 50% when, you get 10 million. Try to grow at 50%, okay, when, you get 1 trillion.
But they are cannibalizing their competitors. Look at Samsung's results last night.
Listen, man, Apple is a great company. But if I've learned anything inside life is that everything goes up and everything goes down. Everything. Everything. Yeah. It does. It's going to be the best in the world. Because guess what happens, folks? Is that people that are in the company, they accelerate up, they retire, they're gone. Someone else knows. Yeah. That's just life. That's in fact. We got a great tiger out in Hawaii, and he basically teaches me a lot about that circle. That circle of life, folks, okay, is totally where it's at. And that's it. It's hard to comprehend. It is. I mean, it really is sometimes because, our minds get in the way. But the bottom line is that it is the true circle of life, man. So.
Okay, so to recap things, this can retest that high volume high.
Yeah. And to recap things, if you want to go short, man, just go through a bunch of equities because they're all over the place, man. Seriously.
Yeah.
And I wouldn't.
But you wouldn't touch Apple right now, would you?
No, because there's so many others that have already shown they've come off the highs with volume. They've gone back up and tested. So.
And Apple hasn't done that, right? So obviously we should wait for the test.
Exactly.
Wait for the test of the high volume high. Correct?
And it's a psycho stock, right? And they got you got all the the Apple freaks. They love it, man, and they should love it because they have great products, but one has not. It's like, can they sell another 100 billion worth of stuff? What you do have is this, and this is where I think you don't have to be a technical person to understand this, is that when you have buybacks, which we have right now, in the tune of 100 billion or 200 billion, right, and the executives get paid by the amount of options that they have, it totally makes common sense that they'll blow all the shareholders' money on buying back because they're keeping their own stock up until they can trade that option in for the share and then sell it.
Yeah.
That's the business of Wall Street.
Okay. So the bias is to the upside on the stock then?
Yeah.
Thank you very much.
Okay, man. Have a great one. Have a safe one. What happens, folks, and this is something you absolutely want to wrap your head around. Because, okay, so picture something. I'm always trading, okay? But in the course of, my career, I've had long-term trades. And some of those long-term trades absolutely have to do with I got stock before anyone else got stock, all of the above. When that happens, okay, that's all you think about. Don't think for a second, okay? Every one of those CEOs that are out there, when they ask them about the stock, no, I don't think about the stock. That's all they think about, folks, okay? Because they're thinking about the options. That's not 24 hours a day, but let me tell you something. It's 23 hours and 50 minutes, okay? That's the bottom line. When you go to Apple, bottom line is that, Tim Cook's getting paid on his options, okay? So one of the cleanest ways that you can do that I don't agree with, but the bottom line is that you take the huge amount of cash, you keep buying your stock back. As you buy your stock back, what ends up happening? Well, it's all about supply and demand, right? Now, in Apple's case, they had a big problem because they had 5.7 billion shares. So they can be buying back forever. And, it's going to make a difference, but the difference is not going to be as dramatic as it is if the float was a lot smaller. That's how this whole thing basically shakes out. Our phone number is 877-927-6648. BWLD. Let's go take a look at Buffalo Wild Wings. And what you do have with Buffalo Wild Wings is this, folks, okay? Their whole business is predicated on sports. Sports and chicken wings. Well, guess what? We have the biggest fight of the century that's coming up, and most of the Buffalo Wild Wings are not going to pay up for the bout. It's $5,100 per store. What is going to be intriguing there is that I think it's probably a smart move that they didn't. And the analysts can't stand that they're not paying up for it because they think that smaller stores are going to basically take some of their meat. We're going to be right back, folks.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. And check this out, folks. This is going to get interesting. So, when I was just running through the stocks that were winning and losing, about 20 minutes ago, BlackRock wasn't in there. Now, BlackRock, folks, is down 1191 with monster volume. And if you take a look at this intraday, what you just had, there's a monster selling this. Now, this is the reason this is so important. Let me put this on a 10-minute for you, and I'm going to show you something. It just broke. It broke two separate B points with volume, and right at the break, someone just sold another 52,000 shares. Now that's a $365 stock. The reason that this is so important is that when I go inside, and here I'll show you this for a second. Let me put this one up here as to who owns BlackRock. If you own more than 5% of the equity, folks, okay, what happens is that you have to basically let the market know each and every time that you're selling something. If you are a large broker-dealer, bottom line is that what they do is that they most of the time let the market know because it's just an issue that that's what they do. And looking at this, what you have is that there's sellers in this equity. You get MFS, and I've said this many times. Once MFS starts selling, Fidelity starts selling. Well, guess what? Fidelity, okay, bottom line, this is just amazing, man. This blows my mind. This just never stops. So you have Wellington selling, Fidelity selling, MFS selling. They're all in the same block in Boston. But that's not the big one. Where the big one comes in here is that you got, well, they're all big, actually, because Fidelity owns 6.8 million shares. You got Wellington owns 10 million shares. Wellington owns 6.3% of the company. Fidelity owns 4.1% of the company. MFS owns 1.84. Morgan Stanley selling, they own 1.4. Capital Group is 1.1. That's American funds. The reason that this is important, and it's just something to keep your eye on, is that all those companies, what do those companies do, folks? Those companies are in the financial business, and they're selling the largest money manager in the world. Okay? So, what do they know? What they know, folks, they know the business. And they know that we're at highs, and they're nervous, and they're selling out. So you got BlackRock, we're at 366. The high of BlackRock is 382. What you're going to see out here today is that basically in 6.5 hours, BlackRock just gave back till February 10th of this year. See, this is a move, and this is a move, mind you, without the BlackRock coming out with numbers or anything else. That's pretty wild. And what they may have just, I see what's going on here. So check this out. BlackRock, as I'm pulling this up, BlackRock's own affiliates are selling shares. So BlackRock affiliate investment advisor, owner of more than 10% of the preferred BlackRock partners, reported on Form 4A on the 31st of March that they're selling out 400,000 shares, and they only owned 569,000. Bottom line is that this is where the sharks take on the sharks, folks. This is where this gets really wild. But what's so cool about it, right, is really understanding, and that's when you're right inside, meaning all those firms that are selling BlackRock right now, what do? They're some of the largest money managers in the world, okay? So what that is saying is that internally they're looking at their own companies saying, oh man, okay, something's going on here. We're going to sell one of the largest holdings we own, and inside one of the largest holdings we own, guess what? It's the money manager, and this money manager, by the way, folks, and BlackRock is the largest money manager in the world. It's something about in the trillions of dollars. So big numbers. After the close out here today, I suspect we're going to get who is going after Salesforce. We'll see how that does shake out. What's going to be amazing is that, of course, what does happen is that the guys that started Salesforce came off of Oracle. The same group, not the same group, but the same type of business, of course, is SAP. So we'll see where that shakes out. And I guess what's on the table also, which is getting pushed out there, is it Microsoft that's willing to go after that. Bottom line, the subscription-based business inside both Salesforce and Oracle, and there's nothing. Bottom line is that selling software in that type of business is good business. Let's go over and we take a look at the SPYs as we come into the close out here. So what we're going to see is this: the SPY right now has done 114 million shares. It's very subtle. You can really say it's a sideways move out here today. When I say a sideways move, the reason you can say a sideways move is that you haven't broken the highs of yesterday nor the lows. The highs of yesterday were 211.50 in the SPY. The low was 209. What you have done, and this is where you have a wicked expansion of volume. Yesterday we did 86 million shares. Today we've done 114 million. And what have you done? You haven't gone to a higher high. You haven't gone to a lower low, but you're pushing the lows with volume. You're certainly not pushing the highs because the highs up there are 212.33. The low we're talking about is 209.33, and we hit 209.60. So we missed that by about 30 cents. Bottom line, that's what you're doing. You get distribution that's happening out there. We take a look at the 3 Qs and match that baby up. What you have with the 3 Qs is that we're at 109.38, and as I said a little bit earlier, the 108.91 is really inside the lower range. If you do close inside the 109.42, that's inside the lower range. That range would be from the March 2nd level. The small caps have done the exact same thing. We'll see how this market gets sliced and diced tonight. Bottom line is that which is so intriguing is that nothing has happened with the Fed. Bottom line, the Fed fund rate out there is saying is trading as we may get a pop on rates. The Federal Reserve will go from 0 to 0.25 in December. There's no meeting in June. No meeting in May. June 17th will be the next time that we supposedly hear from the Fed. And when we talk about the Fed, Ben Bernanke just got hired by PIMCO as a consultant. Okay, so bottom line, that's the second consultant job he's taken in the last couple of weeks. And I suspect, he's going to have a dozen consultant jobs, no doubt. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming back after the close with a lot of numbers. The numbers are out there. I suspect they're going to be fast. They're going to be furious. And bottom line, do yourself a favor, folks. If you're long this market, get stops in. Just get stops in. Go look at where the October 15th swing low is. It's way down, and that's where we're going. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is also by an unknown author. Expect the best, believe something good is going to happen, and it usually will. Market-wise, let's take a look at it out here. We have the Dow Industrials down 74. Bingo. NASDAQ down 31, S&P's off 13, gold contract down $9.70, trading at 12.04 even. Silver off 7 cents at $16.52 an ounce. Copper down, copper up 1 penny at $2.78 a pound. Light sweet crude, that had some action out here today, up $1.42, trading at $58.48 a barrel. Bonds got crushed. Down 17 on the 10-year at 128.13. The 30-year off 2 full points at 159.15. And King Dollar tested the March 18th low, 1 tick below it. Pretty amazing, too. King Dollar ended up down 864 ticks at 95.33, and it did have higher volume, folks, so King Dollar is going south. Euro up 130 ticks at 111.11. You gotta love that. Yen up 19 at 119.04. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Let's start with the SPY. We take a look at the SPY, and what you have is this. Now, the S&Ps themselves are down 12 points. We had a 22-point spread in the S&P today. Realistically, the SPY, folks, sideways move. Your high out there in the SPY today was 211.29. Your low was 209.60. You're inside the lower range. You know, what happened with the SPY is that on Monday, you make a high. That high that was generated was 212.48. It couldn't handle it. It was testing the 212.24 from March 25th. So it gets above it, closes under it, stays in the lower range. And now what do we got today? Well, what you have today is this. You have an expansion of volume with lower price. And what does that do? That brings your probability up much higher, number one. That will go into the bottom of the range. Number two, it brings your probability up much higher of what? And this is where we're going to go. So picture this. We're at 210.57 right now. Your October 15th swing low, folks, is hanging out there. The high of that low is 187. The low is 181. That is a monster move. That thing's going to get tested. So how long will it take? Who knows? Bottom line, many equities have already tested that area. Some have broke it. They come into it volume, they break it. So how do we get there? You're going to get there step by step. Bottom line, you're 210.57. Now, this is something to watch. The next number to watch is this. It's not the number that I suspect we're going to go to right away, which is on March 11th. That's the 205. The number to actually watch is going to be the 208.47. And this is why. You have a couple different ranges inside the cash S&P and the S&P in general. When we got over the range that we have been dealing with from November 24th going all the way over to February 12th, that range, when it went out of that range, it went out of that range on February 12th as it got up and over 208.15. So what you have is this. You have $2.40 lower, and that is going to set you up inside the lower range, number one. And what does that mean? Well, what that means is that then it's going to go after the consolidation from December 16th, which is 197. Now, what does that do? So watch this. This is I love bisecting and dissecting markets. I'm telling you, man, because it's like crazy. So it's almost like, how do they consolidate these points? So what does that do? Well, what that does, folks, is get you inside the range that was established in September of 2014. Because as soon as you get under 201.38, guess what? That brings the probability up much higher that 181 is on the agenda. So bottom line, that's your longer view of where we are right now. You're not going to hear from the Fed again until the 17th of June. The Fed statement today, bottom line, came up, unanimous statement, things are slowing down. You know, they want to see more jobs before they go up on rates. That's the bottom line. We'll go over to the 3 Qs. We look at the 3 Qs. 3 Qs were down 69 cents, 109.35. Bottom line, I suspect that tomorrow morning will be inside the 108.94, which would get us into that lower level. Bottom line, that cut to the chase, What is the October 15th swing point? 92 to 90, and right now you're at 109.35. Check that out. I mean, that's pretty intense. That's like a 20% move. We haven't had I don't think we've had a 10% correction in 3 or 4 years. Never mind a 20% correction. People will be going crazy with a 20% correction. Small caps. What do we have with the small caps? Small caps are inside the lower range also. Small caps right now are trading at 123.80. We'll see how it handles the 121.54 level. Gold contract. Let's take a look at gold. Now, this is going to get wild watching how gold shakes out, and this is why. The gold contract today, okay, so since the low that was established, I'm going to bring this back here. I'll show you something. So last low that was established in gold, folks, was on March 17th. We got 1142. You came off that level, straight up 1142 to 1220. Nice move, right? Back down with lighter volume, went topside again, had the juice behind the move, all of the above. Gold had an incredible sign of strength on the 27th, Monday. Wide price spread, accelerated volume, all of the above. Had follow through Tuesday. Tuesday we did, so Monday we did 207,000 contracts. Tuesday we did 158,000. Today we did 134. So what does that set up? Well, we only needed 106,000 contracts to break the B point of an ABC structure on the way up. 113,000 rather. This coming into Thursday, what I expect you're going to get is that they're going to try to drive gold into about the 1195, I suspect again. Maybe you'll see it come back with lighter volume. The building cause is still in place right here. That's the way this seems to be shaken out. And the reason I'm going to swap right from this into the dollar, because I want to show you something inside the dollar. Because I expect what you're going to see is that the dollar is going to have some kind of a small bounce. But the dollar has confirmed that your probability is dramatically higher, that the turn that I suspected right at that very high up there of 100.78 in March has happened. And this is what it is. When we came off that with volume. You know, March 18th, you came down with 102,000 contracts. That's the most, basically that, well, it's not the most we've done, but it was a lot of contracts. Then we went up and tested again tested a high on April 13th. April 13th, that test was anemic. The test at the high was 57,000. You came off the 57,000. You expanded to 76,000 on the way down. Today, we did 101,000. We hit 94.75, and this is just amazing because the March 18th low is 94.76. Now, that being said, I expect you're going to get some kind of a bounce out of this. Why? And this has to do with the amount of energy that the market took today, folks, okay? So what the market did today, if we go over to these S&Ps for a second, just so you can show you, intraday today was a heck of a day, okay? This market was up, down, and all over the place, and in fact, didn't end up going anywhere. S&Ps are off 13.5, but bottom line, when you take a look at what type of energy we had going, it was huge. The S&Ps at 9 o'clock this morning, well, at the open, we're at 2,100, 2,107. They go down to 2,100. They go back up to 2,104. They get smoked down to 2,090. They make it all the way back up to 2,107. And then they close out at 2,098. Bottom line, that takes a huge amount of energy in the marketplace, period. You're coming into Thursday, what do you have? You have window dressing. Friday, window dressing. I suspect we're going to get a small bounce. Nice little setup. You'll see the bounce on light volume. Pops up. What is that small bounce going to do? You're going to get a small bounce also in the dollar. Gold will pull back. Sets up another nice buy. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back. Dow Industrials closed down 74. NASDAQ off 31. S&P's off 13.5. We're going to be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, They just recently unveiled the new 5-year Market Safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And, yesterday had Twitter basically release their numbers early. The thing that's pretty amazing, folks, is that it was the shareholder site, but that shareholder site in particular, it was actually the NASDAQ that released it. The NASDAQ OMX group accidentally made the early release of Twitter's earnings at 3 o'clock. Bottom line, so check this out. This is a NASDAQ owns shareholder.com. And what happened is that they put it out there 45 seconds. Someone realized it right away. Guess what? It was too late. Why is it too late? Because what you do have is that you have plenty of very smart programmers that are also in the news business, and what they're doing continually is monitoring all news sites for any bit of information. And the bottom line is that 45 seconds is like years out there. Bottom line, what does it do? Solarity gets the news, pushes it out, takes, well, they didn't take it. Bottom line, they pushed it out to everyone simultaneously. And bottom line, you talk about getting taken to the cleaners, so it's pretty amazing. What is going to be interesting is to see how the regulators handle this, okay? Because what you do have, okay, is that in December, this is the same firm that got hold of ADP's payroll 4 minutes before it was scheduled to be released. But it's not, I don't even mean that get hold of it. The bottom line is that it was in the public domain. Bottom line is that they're doing their job looking for content, looking for news, right? So I suspect what you're going to have is that you're going to have the structure, the bureaucracy structure, wanting to blame someone, and they'll probably go after them. And in that same context, what gets real interesting is this. Yeah, and as our man, Mr. Dave White, they're calling it screen scraping. That in itself, okay, so picture this. Picture what you can do with words. So that's in the news clips, screen scraping. Now, screen scraping sounds like bad, doesn't it? That's when I look at it, it sounds bad. The bottom line, bureaucracies like to basically do things or say things and put labels on them so they can basically put it on someone else. And in that context, this is where this is really going to get wild, because in that context, you saw, what was it, last week? Last week, they're blaming one guy from London for the market crash of May of 2010, right? Folks, that's so insane, it's unbelievable, okay? I talked about this before. And they have them on spoofing, they have them on, and with spoofing specifically is that you're putting huge amounts of orders in and you're canceling them, okay, whether it's a bid or an offer. That could be stopped in literally 30 seconds. The reason that the markets, that regulators don't stop it, is that the markets themselves, folks, make so much money on the aspect of those large, frequent traders. That's the reason. So the way that you just stop it is this, okay? Is that if you put a bid or an offer in, you'd make them hold that in for whether it's a minute, 30 seconds, whatever that is, and guess what? They could get hit. That stops it all right there and then. It's so simple, it's sick. 877-927-6648, so you can see, why they basically don't want to stop it, okay? They don't want to stop it because when you look at their financials, whether it's a CME, the amount of money that they make on quotes is astronomical. And I can tell you the amount of money they make on me is astronomical as one person. And this is why. So watch what ends up happening, folks. And this is not even, I'm certainly not a high-frequency trader. That's not it. But there's certain rules. And what ends up happening, I'm considered a professional trader, okay? And once you get marked that, you're done, okay? So watch what the difference is, okay? And I've been marked this for a long period of time. So as a retail client, I think most retail clients, you don't even pay for your quotes. You pay $3 or $4 or $5, right? I have 3 separate systems, right, just in case something goes down, okay? Inside, so I get a Bloomberg, I get the Thinkorswim platform, and I get an e-signal, okay? So bottom line, I'm always using Thinkorswim for everything, but I have other platforms in case something goes down. But check this out. Between the New York Stock Exchange, I have to pay the New York Stock Exchange 3 separate bills for quotes on each system. And each one of those are $158 just for one. I have to pay the NASDAQ quotes for every one of the systems. I have to pay the CME quotes for every one of those systems. Every single system that you have, as a professional, you have to pay up. The professionals that are putting bids and offers in like that, you don't even want to think how much they're paying. So bottom line is that when you cut to the chase, that's what it's about. So let's go over to Yelp for a second. Yelp closed at $51. That's trading at $45. And this is where it's pretty amazing. This site here, what has happened with this site is the aspect of how many reviews aren't real. That's what this is coming down to. So Yelp closed at $51. Let's see what they say about their numbers. Okay, their revenue, the estimate of the revenue is $137 million. They took in, okay, let's go, they took in 131. They're claiming that for the revenue of 2015, they still see the same amount of revenue. Somehow they're going to make it up. They see their earnings still the same. Market's not believing it. That's the bottom line. Because this quarter right here, this first quarter, they were supposed to make 1 cent and they lost 2. So you can see that that's a big number. Bottom line is that Yelp, what is that down? That's down $6. This is after stock that already got killed. If we put this back into a daily and we take a look at it, actually we'll put it on a monthly. They'll give you a clearer view of what's going on. Oh, look at this. So if you put it on a daily first, oh man, these are all over the place. If you put it on a daily first, guess what it had? Okay, high volume low at 42. You're at the high of the high volume low is 45, the low is 42. So it's trading at 51. You talk about sticking out like a sore thumb. That was the February 9th. It's just a monster. It's just bang right there. And you know what happens is that they don't let folks out of the marketplace, folks. This October 15th swing low is a heavy, heavy scene, folks. So we'll see tomorrow morning if, in fact, it's going to do another ABC structure on the way down. Oh, you know what I got to show you on this, though? Wow. This is going to be pretty cool. I've talked about this a few different times. For some reason, equities, futures, currencies, everything, when they start gapping, folks, they love doing 3 gaps. And this is going to be the 3rd gap. You know, we gapped down from $73, October of 2014, opened the next day at 56. February 5th, you're at 57. You opened at 44. Now we're at 51. We're going to open probably at 44 again. Wild. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
Do you know the 7 most critical factors that influence every decision you make and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And good old Mike in Toronto, when you called, okay, bottom line, if you take a look at Apple right now, Apple's at 128.41, and this little baby, now this is where this gets really interesting, is that this is still trading, and there's going to be some problems here. And what the problems is that they found a flaw inside the Apple Watch. So this baby is going to basically get hit, and it isn't hit yet, by the way, folks, okay? So you want to take advantage of that, take the shot at it, and if you did that, what you'd be doing, so Apple closed, and when something like this happens, by the way, too, folks, okay, what you'll get is that the bulls and bears will push like crazy, but bottom line is that the risk versus the reward's not bad here, because you're at 128.64. It's too bad the option market wasn't open right now. Bottom line is that you can put the stop on the other side of 131.20. So we'll see where this whole baby does shake out. But that news will get out there by tomorrow morning. That'll be all over the place tomorrow morning, actually. You know, that's where that will be. And this is pretty cool because we got our tech expert right here at TFNN, our man, Mr. David White. David, what's going on, man?
Hey, I just thought I IM'd you about the problem.
I know, man. I love it. I love it, man. So tell us what is the defect?
I put a link on there in the DIN to you.
Okay.
So you can pull that picture up and show everybody.
Oh, good. I will.
I have an easy way to do it there.
That's great. Okay.
Remember we were talking about tearing down the watch on Friday? We were going to get the bill of materials and all that.
Okay.
Well,
I have it up. Beautiful. Okay.
Now, that's what's called the haptic engine.
Okay.
And it's kind of tough to tell, but what it actually is just a electric coil there, and that there's kind of like a shiny metal case there.
Yes,
that
I see
that slides back and forth and makes a tapping feeling on your wrist.
Okay.
Well, apparently that's what has been highly defective and why they don't have a huge amount. At least that's the report.
That's cool.
Coming out.
Yeah.
But apparently that hadn't gotten any better, and they're not going to have any more of these things. And that's why they continue to keep pushing the delivery of these out at least somewhat. They were supposed to have 5 million to begin with, and
Yes.
it looks like that was probably closer to 2 million. So they have a thing in manufacturing called yield, which is how many of these things actually work.
Yes.
And apparently this was like 1/3 of these things worked.
Wow.
But that little component that you're showing there, all that does is a little bit of electricity goes through it, and it slams it to one side. It slams the little shell to the other side.
Yeah.
And that's what makes the tapping feeling on your wrist. But that's when you look at Apple tomorrow, I don't know if it's going to affect it, but that's exactly why that particular part is failing. I think that was the Wall Street Journal.
I suspect, not that the Apple Watch is bringing huge amounts of revenue to Apple right now, folks, but what you do have is that the aspect of, number one, a glitch inside something, any type of computer software is a problem, okay? Inside the watch, I'd say at the beginning, it's a larger problem. The thing that's really cool, man, though, is that if you go, Dave and I do a show, folks, a technology show every Friday from, 4 to 5. And, Dave's been talking about one of the main reasons that, he felt that this was going overseas versus here, that there were going to be other glitches. I don't think you actually thought, though, it would be something like on a hardware, right? Software more than anything, right?
Well, we already knew that the software wasn't up to specs.
Yeah, right. Because the hardware is a bigger glitch, right? Isn't it? Is it? Or
well, apparently they only made the watches where these things passed the test, right?
Okay.
So apparently it's not like these things are going to fail out in the field.
Yeah.
It's just that all the people that have seen their delivery dates go from May to June to July now.
Okay.
Doesn't look like there's a big answer on whoever manufactures this component.
Right.
And apparently there's just a single source, which is a big no-no in manufacturing. You always want 2 or 3 different sources.
Sure.
If you want to buy a transistor or resistor. But, if you go to Intel and you want their processor, there's not another Intel to go to, right?
Right.
So sometimes there's companies like this Taptic manufacturer, and maybe they've got all the patents, and there's nowhere else for you to go. So it may not all be Apple's fault, but at the same time...
But it's in there, right?
At the same time, what you do normally, if you're the size of Apple, is you make a deal with them and say, okay, I want a second manufacturer to build this, and you're going to license that to them.
I see.
And they're just going to send you a check every month. But
Right.
that way I don't have to worry about your single factory burning down and me not having any parts.
Which is smart.
Right?
Yeah, right.
Right. And they apparently haven't done this. Maybe they couldn't do it with the people they wanted to. You never know the backside, because every one of these deals with Apple comes with a non-disclosure agreement. So you don't know how many they sold, how many they did. You always see, something like Skyworks Solutions kind of bounce with decent sales numbers.
Yeah.
Because that's the only time you actually even know how many maybe products that they sold to Apple, right?
Right.
So just a little interesting thing in there. But if a lot of people were counting on the watch and figures in this next quarter, I think, at least from this report from the Wall Street Journal, looks like you're not going to get any in this quarter of any size. And we may even see these things pushed out to late summer.
Yeah, well, it's going to be, we'll see where this shakes out. So when we just start talking there, it was 128.64. It's only down 20 cents now, but bottom line.
Yeah, like you said, it's probably not going to add a lot. No one was thinking a lot to this quarter already. The one thing I would say is I've been talking about it on my show during the Power Trading Hour for a few days. And that is, it's in a big asymmetrical triangle.
Yeah.
It broke out to the upside, and normally that's about an 80% counterintuitive move, right?
Yeah.
So it breaks up to the upside.
Right.
And if you go back through it, the line I'm looking at that needs to really hold is about 126. Below that, you basically, it is a fairly decent pattern with about an 80% chance of big success, would take you back down to about 115 to 110 on it, and which is kind of nuts when you think that they've got $200 billion to buy their shares back at any time.
Let me ask here. Let's bring this up. I want to bring this up because folks, what Dave's talking about here, right? This is really cool. Where are you?
I think I got a picture of it here.
Dave,
maybe
where are you starting the triangle from, Dave? What price point you starting it from?
Give me just a second.
Cool, man. We're going to do this. So, because what happens, folks, this is a real trick. And it has to do with the triangle in general, and it has to do with where the breakout comes from, folks. That's what I've found more than anything. But I love looking at these because what happens is that you can learn a lot over the course of years as to, number one, where they break out from. Do they break out before the end of the triangle? Because the further they break out from the end of the triangle, the more problematic it becomes.
The book definition of this is if it goes 3/4 to the apex of the triangle.
Right.
And I've got it showing up. It should be in the den now.
Yeah,
so,
this didn't come across for me for some reason.
Okay. Well, hopefully they're showing it in the control room.
Oh, good.
But,
yeah.
Basically,
oh, good. I'll find it. Okay, good. Go ahead.
You've got two big highs. One was the 133.60, and the other was the 121.63.
Yep.
And from then on, you had lower highs.
Yep.
And lower lows all the way until it broke through and closed above 128.
Okay.
Which was about a little bit more than 3/4 into that triangle.
Okay.
So that's where you're actually looking through that. And then, of course, we had the pop back up. And I'm just showing through the 133 high. It went to 134 above the previous high, closed below it. Now it's back down to 128s, 129s. But pretty much the center of that triangle would be about 126. So below that, you really have to wonder whether or not they're going to dive in and start buying, at least on a technical basis, whether they're going to come and buy stock at that level. They've got all the cash, which is always problematic when you're looking at one of these things. But technically, could very easily go back. You know, if they don't go jumping in, could easily go below that 126, and that would confirm that asymmetrical triangle pattern.
Yeah. Just give me one second.
Did you get the chart?
I didn't have the chart, but I just got it. I just did it. Okay, so you break top side. Yeah, it's gonna be interesting because it was so close to the end. Right. Okay, I got it. Well,
so you got a little bit, and this may be one of the times it doesn't work. But
no. Listen, it's great watching. So what you have, folks, is that it's about an inch away from the end of the triangle, which isn't bad, actually. Do you know what I mean?
Right. Yeah. It's very good. And the bigger thing is just how many stocks have this asymmetrical pattern out there right now, and a kind of bounced back up out of narrowing ranges. And like I said, about 80% of the time, if these things can make it 3/4 of the way or farther into the apex of this triangle, and basically stocks like that have popped on at least dubious news.
I'm with you.
Yeah.
Well, listen, man, we appreciate the update, man.
Okay.
Look forward to the show tomorrow. Don't forget, folks, Dave, a great show every trading day right here at TFNN, 1 to 2 Eastern Standard Time. All the programming, too, by the way, starts at 9 o'clock and 8 o'clock in the morning, right on your cell phone, tfnn.mobi.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow off 74, NASDAQ was down 31, S&Ps are off 13. And if we go take a look at Baidu.com. Baidu just come out with the numbers, folks. We take a look at Baidu. Baidu right now, it closed at the 220 area. She's traded down to 206. Right now, I believe she's at 213. She's at 213 right now. Numbers go like this on Baidu. The estimate was 2.6 billion. They took, well, this is the second quarter here. One second. Let me get first quarter, what we're looking at here. This year's. Okay, so the estimate first quarter was $1.16. They took in $1.22. So they took in more. Bottom line, the market's not taking it, though. Their second quarter estimate, it looks like, was $2.68 billion. They're saying that they're still going to take in $2.64 to $2.7. They're looking at their revenue. So the revenue fell short. That's what happened here. $2.07 billion was the estimate. $2.05 they came in with. If we take a look at Baidu.com, you put this on a daily basis, what you're looking at is this also has another high volume swing low from February 12th. So if we take a look at this, and this also is sticking out like a sore thumb. This is on a few of them. The October 15th one's the biggest one. But what we do have is on February 12th, folks, the high was 206. The low of this was 199.70. That's what it's going to go after. That's the bottom line. That's what that wants to go after. Sam Adams. Sam Adams come out with numbers after the close. Bottom line is that the numbers were pretty good, but Sam Adams was getting smoked all day long. It was down $8.96. Stock is still not moving after the close. In fact, it's down another $1. And the numbers look really, really great compared to what happened the last time. Now, Sam Adams had already gapped down from 330, and you're at 259. The estimate was 67 cents, and they took in $1. So bottom line is that they had some decent numbers, no doubt about it. INO. Let's go take a look at INO. INO also just come out with numbers. This is a pharmaceutical company. This closed at $9.85. This is trading right now at $9. What this equity has to say, let's see. This will be interesting. Don't even think about touching this thing. So what's going on here is that they're going to do a secondary, and at this particular point, they're not saying how much that secondary is going to be. Oh, man, this is really dangerous. When you do a secondary, so picture this, folks. This company has been pushing stock out to the public for quite a while at less expensive prices. Anyone who's bought it has done pretty good. There's no doubt about it. The stock's trading at $9.85, and they've had the last push out was February 27th, and it was at $2.90. So you can imagine, oh my God, that's a huge. Of course, they want to push stock out. They take in, check this out. This is pretty amazing. These biotechs are a trip, folks. This company here only takes in $2.1 million a quarter. $2.1 million. And they have a market cap of $598 million. Man, this company better have something that's going to do something. So they research and develop, let's see. Okay, it's a cancer, DNA, infectious disease. They got all the right words in here. The company develops cancer DNA, infectious DNA, vaccines, anti-inflammatory drugs, and animal health products. Bottom line, so they're in Bluebell, Pennsylvania. Oh boy, they get that's really interesting too, because the good old Bluebell is where those they had to shut down those the good old Bluebell ice cream. Bottom line is have 106 employees. This is amazing, man. It blows my mind that you can take in $2 million a quarter and have a market cap of $600 million. Anyway, they're going to do a secondary. No, they're going to do more than a secondary. They're going to do. Yeah, let me walk you through how they've stayed alive. This is pretty amazing. This is a good broker-dealer community pushing equity out to basically the public. So your first get-go was in July of 2009. They pushed out 11 million shares at $2.70. Then that kept them in cash until 2011. December of 2011, they pushed out 7 million shares at 52 cents. And now check this out. This is when they really got going. March of 2007, let me put this in this is just a classic, man. People have made a lot of money on this stock if they've been in. So March 7th of 2013, they pushed out 27 million shares at 55 cents. And then the stock goes from 55 to 290 in a year. They push out 21 million shares at $2.90, but now they're going to really push out some stock. Because picture something, you have a market cap of 500 million. So now let's picture they push it out at $8. They're going to have some big money. I'm telling you, man, you got to love pushing paper. Pushing paper is just absolutely phenomenal. So where do we go market-wise? Okay. Oh, I know where we do want to go for a second. We want to go overseas because I want to show you something. The DAX has been the leader, folks, all over the place. The DAX is toasted and roasted in an incredible way. Oh, I got to see this. I got to go over to Apple there for a second because when we were reporting that, folks, we knew that CNBC wasn't going to report it right away because that's just how it goes. And there you go. Hey, listen, if you're one of the tigers and tigers out there, it's already down $1, and guess what? There's no doubt. There she goes. She's just getting reported, so that's going to be picking up more. Thanks, Terry. That's crazy. But listen, that's where it's at. You want the edge, folks? Tell your friends about TFNN. Thanks, tigers and tigresses in that den. That's a beautiful thing. Okay. It would have been sweet if the option market was open. Could you imagine? Oh, man. Okay, the S&P, where are we going? Bottom line, folks, if we take a look at the cash S&P, we bring this baby up, and what you're going to see, I'm going to put this on, and it is October 15th. The October 15th swing low, folks. You can go to the high or the low, but that's where this baby's going. We're at 2106. 1912 is the high of that. The low is 1820. Bottom line, put your stops in. That's all you have to do is put your stops in. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Don't forget, folks, we start live programming 8 o'clock in the morning, right on your cell phone. TFNN.mobi. Go get them, folks.